Alright guys, this is just going to be rough and rugged, literally just coming on just to see what's happening with the FOMC announcement in about 3 minutes, and then we'll kind of hang around and I want to discuss a little bit about what could potentially be unfolding. Man, this is live with LSP, New York Open. Yeah, that's not going to work, is it? Anyway, whatever, I don't even care at this point. Customization details, just change. What's happening, guys? Yeah, I need to just put any old random, I don't know, man. I'm just gonna put a random picture up because yeah, that's fine. Yeah, I'm not too bad, man. Not too bad. I had a pretty nasty allergic reaction on Sunday. So yeah, man, I'm just getting over that. It can take a while. Obviously, when you have those types of allergic reactions, your body, reduces or releases a lot of histamines, and obviously, you take antihistamines to try to prevent that. I'm allergic to bees, so I thought it was that, and then it wasn't, and then it's just like whatever, man. But I'm also very stubborn, so yeah. I thought, you know what, something a little bit muted and calm, just to see us through. I want to take a look at the S&P, and in fact, actually, I'll tell you, we'll watch the announcement, right, on the hourly of. Let me just do. I know it took me a second to get on, but let me just quickly do the Nasdaq now. I want to put this level, which is key. I also want to put this level, which is key. So these two levels on the Nasdaq, right, are very important, right? And I'm going to drop down to the 4 hour. I'm going to scrunch the chart up a little bit so we can see where we're at, and then we're just going to watch. So the announcements happened, right? Let me just take a quick look. It's currently 7 o'clock. So 4.75 expected, right? So the forecast was 25 basis points. We've got 25 basis points. Now this isn't where we're going to see the majority of the volatility, right? The majority of the volatility is going to come the majority of the volatility is going to come from the press conference, right? And I think it's really important to understand that the fundamentals of the market simply haven't changed. It's very easy to look at things and you see these kind of rallies and you're like, okay, yeah, this is great. Everything looks fantastic. Bitcoin's, stabilizing up here at, sort of 23K. Binance is holding above 300. The broader market looks good. Everything looks great, blah, 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 right? But fundamentally, nothing's changed, right? We haven't seen anything change. And in fact, if you want to get technical, things are actually getting worse, right? So because things are getting worse, it's very important for us to understand what the impact of that is. I am currently live on YouTube. What the impact of that is let me see. What the right, 1 second, guys. Sorry. There we go. So it's important to understand that as investors, we want to try to find the best opportunity for us, right? Any fool can pull the trigger. Anybody can just buy, you know what I mean? But the fundamentals of, and I'm not even going to mention inflation because I'm sick and tired of talking about inflation, but the fundamentals of what's happening around the world, people struggling to pay their bills, this hasn't changed. We know this, right? I mean, I talk to so many people every day, you know, you guys, people that I know offline and online, it's all the same narrative, you know what I mean? I can't afford to pay my bills, I'm having to downsize, I'm having to do this, that, the other, whatever. You know, so we know that these things are a problem. And as such, we have to be mindful that the impact of whatever we're seeing in the markets, right, is lagging. This is so important for people to understand. Okay, the markets, believe it or not, are actually the lagging indicator. We, the people, everyday living and so on, is the reality of what's happening. It's just taking a while for the market to catch up, I will not change my narrative. How are you doing? Morning, Mike. I will not change my narrative, right? There's so many people that keep saying to me, you're wrong, this is the bottom, the markets, you know, they're going to keep rallying, you're going to miss an opportunity, blah, blah, blah. And I say the same thing over and over again. I'm like, do you really think that with everything that's happened from 3 years ago up to this point, and then the narrative that they're spinning openly now, it's not like they're trying to hide the fact. They are literally trying to control the financial system with CBDCs, regulations coming to the cryptocurrency market. There's a lot of other things that are happening. People are still suffering, if not more now. You know, do you really think that any of that has changed? No. So why would you go and pile money into the market knowing that it's almost guaranteed to be a bull trap, right? And then the argument is, well, hang on a minute. We go over to Bitcoin. It's like, well, where do you buy then? You know, let's say that the market just continues to rip to the upside, you know, and goes to say 32,000 on Bitcoin. Missed an opportunity, right? Let me ask you guys a question. May as well get some input here, right? If Bitcoin rips to 32,000, forget the Fed and all this other crap. If Bitcoin rips to 32,000 and you're not in it, right? Would you feel, and it's not just for Bitcoin, I'm talking about just investments in general, but I'm using Bitcoin as an example. Would you feel like you've missed an opportunity? Man, I really wish there was thousands of people on this stream, honestly. It would just be so much easier to get into the minds of people. So I've had a couple of no's. Somebody's saying no, somebody's saying no, it'll pull back. But let me really break this down, right? And obviously we're kind of watching this reaction. There is no reaction, right? There's been no reaction to this. You know, the Fed's basically just kept everything the same, so we can comfortably talk about Bitcoin. I can track it anyway. I can see what's going on, so there's no issues. If we get a spike in the market, we'll see it, right? So let me break it down for you like this. Let's say Bitcoin rips to 32,000, right? There's a lot of people out there that are going to feel really gutted that they missed an opportunity, right? And this isn't a bullish scenario that the bottom's in. So Bitcoin rips to 32,000, pulls back to 30, then it rips to 37, pulls back to 33, rips to 50, and you're like, oh my god, like I can't believe I've missed an opportunity to buy Bitcoin down in the 20,000s, and now it's back at 50,000, right? And you're ripping your hair out. That's enough to drive anybody crazy, right? I've done it many times. Right? I've seen so many opportunities like that. And we convince ourselves that, oh, this was the one, it's the only one, there's never going to be another one like this, we're never going to see this ever again, and so on and so on and so on. But then we have to put things into perspective and understand that this is going to be a multi-year bull run, right? So when you look at that narrative and you're like, okay, if this is going to be a multi-year bull run, does it really matter if I pick up Bitcoin at 32 or 33 or 35? You might say yes, because I'm not going to get as much for the money that I put down as I would if I bought it at 20,000. I agree. Mathematically, that makes perfect sense. But let's say Bitcoin gets back up here, right? And let's really emphasize it, you know? Right? So Bitcoin's back up here in the 60,000 range and you bought at 33, 34, 35. Do you really care? You know? Answer me this, and I really hope people are honest, right? And I'm sorry to put you all on the spot. But is there anybody here tonight that can put $100,000 into Bitcoin today, right now? How you doing, Hal? Yeah, man, thanks. I'm just going to assume that nobody can. Lobo's saying no. Lolster's saying no. And I'm going to assume it's going to be a no across the board, right? So do you realize mathematically, for you to make up, for you to make a decent amount of money on Bitcoin, right? In the fashion that we're talking about here, like you need to put in a serious amount of money, right? Minimum 100,000 for it to even matter. Yeah, for it to actually change your life, yeah, and even then it's probably going to be meaningless as the years progress. So when people talk, they talk absolute nonsense, man. They're like, oh, I could have got it at 20,000. What, with your $1,000? Or your measly $5,000. You know what I mean? And you could have doubled it to 10 grand. Whoopee-doo, great. What's that 5,000 going to do for you? So the point I'm trying to make is, there's so much focus, right, on doubling or 10xing your money, right, and you forget to realize that the amount of money that you're working with is relative to your life, relative to what you're doing, and it's not enough, right, for life-changing generational wealth. It just isn't, right? So whether you pick it up at 20k or whether you pick it up at 32,000 or 40,000 or whatever, it's not really going to make a blind bit of difference. What will make a difference is if you scale into Bitcoin, and we're using Bitcoin as an example, if you scale into Bitcoin in a way that's safe, right? So right now it's at 23. You grab it at 23, it drops to 12, yeah? Or let's say it rips to 32 and then it just tanks because war breaks out, which we know it's coming. I'm sorry to say it. If anybody on this stream tonight thinks there isn't going to be a war soon, that you don't know, like you're blind. Sorry. I don't want there to be a war, of course not. Nobody wants that. But it's coming. There is absolutely going to be a war. And it is going to break out. I mean, there's already a war going off in Ukraine with Russia and some other things that are happening. China's sticking its beak in. There's a lot of stuff going on over there. America's debt ceiling is all over the place. Inflation's running rampant. You've got hyperinflation in some countries around the world. It's like we are literally on the cusp of just, the world imploding on itself. So what's the likelihood, right, that Bitcoin or any asset class really, besides commodities, are going to be ripping to the upside anytime soon? We're going to be down here for a long time, yeah. So just be patient. Which war? Well, Farah, it could be any war, really. I mean, I don't claim to understand the mechanics of what's happening around the world, right? What I like to do is I like to look at, the effect that it has on communities, or the effects. It's right, you don't have to delete the message, man. The effect that it has on communities around the world, economies and so on. So you've got to understand, war is about power, right? War's about power. War is about control. And obviously, war, as sad as it is very profitable, right? So the effects of war can always be seen before it happens. You can look at any country around the world, right? And we'll use Switzerland as the example. When you're looking at Switzerland has always remained very neutral, right? Because obviously there's a go-between a lot of money that goes in and out of Switzerland, and people use it as a safe haven and so on, right? So if you follow the money that goes in and out of Switzerland, and you might say, well, how do you do that? Well, you just track certain things, and you look at different, commodities and how each country is purchasing or, stockpiling gold, for example, and so on. And you can start to see the inflows and outflows, of commodities that go in and out of countries, right? And when you start to see countries either stopping the production, right, or the manufacturing, or the mining of certain metals, right, or hoarding them, then there's a problem there, because that's about control, right? So if we look at China, for example, China controls rare earth metals. I said it backwards. And there's a lot of manufacturing that happens in China, and obviously they've got a huge amount of exports that happen in their country that go all around the world. If that becomes a problem, if they cut off supply and say, right, we're not going to let you sort of manufacture over here, that causes a huge problem, and then it antagonizes other countries. Superpowers start to get a little bit antsy. you're eating into our profit is effectively what I'm saying. So if a country like America says, wait a second, like we're not happy with you eating into our profits, they start getting a little bit feisty. Before you know it, you've got 3 or 4 huge countries that are antagonizing each other, and all of this will have an effect on the markets, and we see it in the charts. What do we got here? Architect Tungsten. Are you assuming that the war is a continuation in Eastern Europe or larger? And if so, what is the expectation in the market leading into this? Well, with most, I'll answer both questions, right? Well, I'll answer it in 2 parts. When you're saying is a continuation in Eastern Europe, right? I think, based on what I'm seeing, I think it's not necessarily a continuation. I personally believe, right, that this war, so-called war, has been happening for many years, right? I think it started about 5 years ago, and it's not the way that we're used to seeing wars, right? I actually lived through, the Iraqi war. Not me personally, I'm not saying me, but obviously we watched it on the news. We saw a lot of, the back and forth. That was physical. You could see people physically in a war. Now we don't necessarily see that as much. What we see is attacks on infrastructure, cyber attacks, huge government organizations using technology to cripple economies and so on, right? So it's a different type of war, but it's still a war nonetheless, right? And it's not necessarily, like I said, a continuation. I think it's a ramp up. Yeah. Afternoon, Captain. I think it's a ramp up of what we're seeing, right? And all of this, I know obviously we're here for FOMC, right? Which is quite interesting, talking about all of this stuff, but we're talking about a ramp up of a little bit of a rally on the Nasdaq here. Okay. So it's going back to what I was saying, it's a ramp up of who has the best technology, who can cripple an economy better, who can stop, supply chains, who can turn the world upside down the fastest. Yeah. So when all of this happens, going back to the expectation of what the market leading into this would be, generally what you'll tend to find is it's a knee-jerk reaction, right? Things are very tentative, right? So it's like standing on the edge of a cliff, right, and somebody's behind you, and you've got a blindfold on, and you don't know when they're about to push you off. This is the scary thing, and that's what happens in the markets right now. We're looking at the Nasdaq 100. This is a futures chart, right? And you can see prices going up. It stabilizes, goes up, and it looks nice and fluid. Yeah, even today with the FOMC announcement, a little bit of a run up. This is the hourly chart, so it's a pretty fast chart. Nice and fluid, yeah? Everything seems fine. But then all of a sudden, out of the blue, something happens. There's a news article, something, breaking happens, and then bang. All of a sudden, the Nasdaq's down at 8K, and you're like, what just happened? Now, when that happens, the immediate response is panic. Yeah? People don't think, wait a second, I wonder why the Nasdaq's down at 8,000. They're not thinking that. People are like, oh my God, I need to get my money out of the market now. So they start frantically hammering the infrastructure around markets, whether it's withdrawals, whether it's trying to connect to their brokerage, whether it's, whatever, right? And while all of this is happening, the infrastructure gets pounded and it really starts to struggle. And then before you know it, the fear kicks in, markets start to really drop, and then the big boys step in and then they start to buy up the market. All the while, war's breaking out, things are going to shit, it's absolute chaos everywhere, and the average Joe has basically just lost everything, So the expectation that this is coming is, for me, it's a likely possibility. That's how I look at things. I don't look at things and say, everything's kind of, rosy. Every single day when I wake up, I'm expecting the market to crash. Yeah, every single day. And until it does, I'm going to continue to expect that. The only way that, for me, the market doesn't crash, is if the Fed basically reduces interest rates, back down to 2%. And what's the likelihood of that happening? Hey LSP, I tried reaching out to you on Discord, but I recently subbed to the Patreon membership. Got the confirmation email saying something about a members channel. Also interested topic of Discord. Yeah, man, no worries. I think I saw that you DM'd me. You did, yeah. I'll get that sorted. Just once I get off the stream, I'll change your. Actually, are you in the Discord? Let me take a look. I'll do it now. It literally takes me seconds. Yeah, there you go. So I'll just add the role for you, Patreon member. There you go, done. You're sorted personality. So you'll see all the Patreon channels now. That's fine. In the message that you get, there's a Telegram link as well. If you want to join that, we don't really use it that much, but sometimes when there's something pressing, I'll post it in there when it's really important. Yeah, no worries, man. I've sorted it. It's fine. So that's that. This is really cool and interesting, SP. Unfortunately, my son wants to play on your phone. Oh, on my phone. That's what I make noise. So architecture. So you're talking about more of the shadow war in a way, more like commodity, export control, cyber attacks. Yes, exactly. That's exactly what I'm talking about. Not necessarily a physical war, and if that is the case, wouldn't we expect markets to look fairly similar to as they are now? Yeah, we would, and here's the problem. So following on from what you've just said, right? Let's say everything around the world is fine. Or at least that's what it looks like on the surface, right? Why is that worse? Like, really think about that for a second, yeah? Why is the surface look of the markets being okay and a war being fought silently okay? Right, why does that seem okay? And what's the real danger of that? Like, I really hope somebody can get this. And I'm not saying I'm the only one that thinks this way. I'm just hoping that there's other people out there that think about what I'm about to say, because it's so important. So I'm gonna repeat that. The underlying war or problems or whatever are happening silently. We're not really aware of them, right? On the surface of it, everything looks great. Markets are rallying. Everything looks fantastic. Why is that worse than just an all-out physical, it's in your face, this is what's happening? It's got to be said, man, I really like this playlist. So nice. History doesn't repeat but rhymes, right? Yeah. Lobo's saying court napping, maybe. But there's a real problem that people just don't see. And I'm only going to give it another 30 seconds and then I'll tell you. At least these are my thoughts, right? Doesn't mean I'm right. So on the surface, everything looks fantastic. But what happens is, when things are happening quietly, this is when controls are being put in place, okay, to, how can I say this? Controls are being put in place to literally control you, yeah? So on the surface of it, everything looks fantastic, but in the back rooms, 12 o'clock midnight, papers are being signed, new laws are being put in place and so on, that prohibit the use of cryptocurrency in a certain way, or, that allow the push of CBDCs to be put at the forefront, or for other things, 100% they're coming, for other things to be put in place. And then what happens is, everybody thinks everything's great until they pick up their phone one day and they're like, oh, what's this? Okay, so I have an opportunity to go and give them my cash, blah, 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 and get central bank digital currency. I have to download the wallet. I get a bonus of 15%. Fantastic. Everybody goes for it. But they don't realize that the infrastructure of all of this was being put in place at the time when everything seemed fantastic and great. And in the process, commodities are being bought up. Commodity prices are going through the roof. Supply chains are basically being stopped. There's only certain foods that are being able, that are being produced and allowed to get through to certain countries. And again, I don't want to go into too much of all of this, but this is what happens. The danger of not paying attention, right, is that you end up in a situation where you are not seeing what is actually happening, and then it just hits you. You end up with, you just wake up one day and you go outside and there's a tank, and you're like, why is there a tank outside my house? You know, I'm not saying this is going to be the case. I'm trying to really emphasize, you know, how shocking it would be. But you go outside and you're like, why is there a tank outside my house? You know, and it's like, well, didn't we tell you? You know, we put it in all the papers, and you're like, what? When? Well, it was on all the websites. Where? You know, it was there, but it was in very, you know, very, very, very fine print. And if it was in large capital letters, it's because you're so dumbed down and so not aware and so not focused on what's happening that you just completely missed it. You know. So, with all of that said, thoughts on EGC? Yeah, not much. Pretty much the same as you know that it has been for many years, I guess, or for a year and a half or whatever. You know, they from what I understand, they're going to be bringing out a wallet, you know, and version 2 of Lunar Sky. Not really sure what that's about. And then yeah, that's it. I don't really see anything at the moment with EGC or any project, really, to be honest. Until the market filters through and really starts to do what it's, you know, what it's doing and gives us a clear indication, I don't think anything's going to move. You know, there's only so many times, you know, and this is not a dig at, you know, a dig at Evergrow, but there's only so many times they can say, oh, you know, we're the biggest project and, you know, we've given the most BUSD, blah blah blah. Okay, great. You know, your price is still down like every other project, and everybody's still waiting for utilities. So, and I say this, you know, with all respect. Yeah, you know, I've always gotten on with Sam, but I say that just as a kind of loose across all projects, right? I mean, you look at Reflex. Reflex have basically given up. They've thrown in the towel, and anyway, some other companies basically buying them, and they're doing something else. It's just the same regurgitated crap round and round and round in circles, and this is why I can't wait to just get Dramatic Finance relaunched, so I can start to start going back to pissing people off. Sorry, I shouldn't really say it like that. Yeah, that's brutal, Farah. Sorry to read that, man. Greatly appreciate the insight, LSP. I'm not sharp on the market, so any and all info is helpful. You're welcome, man. And again, these are just my opinions, right? These are my opinions. It doesn't necessarily mean I'm always right. There's many times that I'm wrong, but the trick to making money, right, whether it's investing, whether it's financial markets or whatever, is perception, right? It's perceived value. If you can get people to see the perceived value in something that you're trying to promote, you know, then they will buy it. But the other thing is that you have to be able to produce something of value without charging people for anything. To basically say, look, you know, we're sitting here tonight, you know, waiting for Powell to start rambling to see whether or not this has an effect on the market, right? And I give my thoughts and opinions. Sometimes they're right, sometimes they're wrong, whatever. But ultimately, the value that you guys receive isn't from listening to Powell talking and watching the reaction in the market. It's about the experience that I have, because I've done this so many times. That's where the real value lies, and that's the only thing that matters. If you're able to take something from that, you know, and use that to make you a better investor or a trader, or even, you know, just having a sort of a better look on life or whatever, then great, fantastic. That's you know, I've done my job. So look, he's going to be yapping in about 4 minutes. My throat's getting a bit croaky, and to be honest, since Sunday, you know, my throat was really swollen on Sunday, my face was swollen, so I'm probably just going to hang around for a few more minutes, and then I'm going to call it a day. Obviously, I'll be keeping an eye on things. I'm personally waiting for just a sharp reaction at some point, but I don't think we're going to get that, to be honest. You know, if we just look at the weekly here of the Nasdaq, the Nasdaq's been doing pretty well. The reason I focus predominantly on the Nasdaq is because the Nasdaq is what's correlated closely to Bitcoin, and Bitcoin likes to, you know, yeah, this music's unreal. Bitcoin likes to follow, you know, the Nasdaq pretty closely. So generally, when we see movement on the Nasdaq, we should see the same, relative movement, you know, on Bitcoin. It does worry me a little bit that the Nasdaq's been tearing really for the last sort of 2-3 weeks, you know, and Bitcoin hasn't really done much. It looks great on this breakout, but it was basically just going sideways for a while. This is going up on thin air. This isn't volume. I've said this before on Bitcoin, and this is what scares me. You know, in terms of investing and piling in, I'm being very, very cautious. I don't just want to go and pile into the market on the expectation that, okay, everything looks great, Bitcoin's running a little bit. Why aren't we seeing real movement across the board? We're just seeing this kind of sort of slow, lethargic grind. Now, let me show you guys something. Right, so this is the Nasdaq. It's been grinding up, and obviously you get that acceleration, and this is why once you get this capitulation at the top, we've had this pretty sharp correction, right? And that sharp correction comes in roughly around about 37% correction. It's pretty insane, right? So it's a 37% correction on the Nasdaq, right? Pretty good, pretty decent. But when you look at this drop, right, whatever area, so this area down here of LP, right, this huge area of liquidity, that's basically just all been absorbed, it's finished, it's done. So the next level down is basically around about 8K, right, somewhere around here. And there's plenty, and here's the kicker. There's plenty of reasons why price could go down here. There's not many reasons, at least that I can see, for price to continue going higher on a multi-year run. This was a multi-year run, this last run that went up. Almost no corrections. You had these kind of mini crashes on the way up, but it was a really nice multi-year run. Just kept going and going and going. I don't think we're ready for that just yet. You know. Lower the music, please. Yeah, man. No problem, guys. It should take a second, and then that should adjust. Is that better? I'll wait for you guys to tell me if that's better before I carry on. Fantastic. Awesome. All right. Good. Do you feel that EGC will survive and be here for the bull run 2024? I do, because they have a lot of money. Right? They raised a lot of money with Lucro. They have, you know, a good amount, you know, sat there. Cash flow is very, very good for them. So there's absolutely no reason. There's absolutely no reason whatsoever for Evergrow to fail. If it does, it's really poor management. Pure and simple. Pure and simple. It won't be money. There's absolutely no reason whatsoever, right, for Evergrow to fail now at this point. If it does, then there's something seriously wrong. They got a couple of million in the bank plus some income, and for all his faults, Sam seems pretty good at budgeting, so don't see any reason they shouldn't still be here then. Yeah, I agree, Lobo. Yeah, for all the reasons you've just said and what I just said. Yeah. Absolutely. You know, and just to be clear as well, I'm not here to judge. I'm not here to say anything. You know, I like to say things as they are. You know, the reason I made a mention earlier about promoting a particular project, it doesn't matter what it is. You know, we're this, we're that, we're the other. Yeah, that's great, but you're doing that in a down market when everything's just basically crap and nobody cares. You know, and this is just good business. You know, you grind through the slow times. And he's done very well in the sense. I'm talking about Sam now. He's done very well, obviously putting his investors first, making sure that he's got money set aside, as you said, budgeting, etc., which puts them in a very, very strong position going forward. Which is why I maintain, and I'll repeat it again: if Evergrow doesn't do well, then there's something seriously wrong there. There's no reason whatsoever that Evergrow shouldn't, shouldn't be a very, very strong contender going forward. They've got everything that they need. So it's 7:30 over here in the UK. Powell's obviously yapping. I'm not watching it, but let me just... me see if I can find a meeting live. 1 second, guys. I'm just checking on YouTube now. Alright, I'm going to turn the music off. Can you guys hear Powell? I'm going to turn him up, yeah?
Job vacancies still very high and wage growth elevated. Job gains have been robust, with employment rising by an average of 247,000 jobs per month over the last 3 months. Although the pace of job gains has slowed over the course of the past year and nominal wage growth has shown some signs of easing, the labor market continues to be out of balance. Labor demand substantially exceeds the supply of available workers, and the labor force participation rate has changed little from a year ago. Inflation remains well above our longer-run goal of 2%. Over the 12 months ending in December, total PCE prices rose 5.0%.
We'll just listen for a little bit.
Including the volatile food and energy categories, core PCE prices rose 4.4%. The inflation data received over the past 3 months show a welcome reduction in the monthly pace of increases. And while recent developments are encouraging, we will need substantially more evidence to be confident that inflation is on a sustained downward path. Despite elevated inflation, longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households, businesses, and forecasters, as well as measures from financial markets. But that's not grounds for complacency. Although inflation has moderated recently, it remains too high. The longer the current bout of high inflation continues, the greater the chance that expectations of higher inflation will become entrenched.
So we're getting a little bit of a drop on the market now.
The Fed's monetary policy actions are guided by our mandate to promote maximum employment and stable prices for the American people. My colleagues and I are acutely aware that high inflation imposes significant hardship as it erodes purchasing power, especially for those least able to meet the higher costs of essentials like food, housing, and transportation. We are highly attentive to the risks that inflation poses to both sides of our mandate, and we are strongly committed to returning inflation to our 2% objective.
Yeah, just as a quick side note, yeah, we're aiming for the next couple of weeks. We're really pushing, but this FSP is becoming a bit of a nightmare. Make sure that you're in the RFVC this Friday at 8 o'clock.
And we are continuing the process of significantly reducing the size of our balance sheet. With today's action, we have raised interest rates by 4.5 percentage points over the past year. We continue to anticipate that ongoing increases in the target range for the federal funds rate will be appropriate in order to attain a stance of monetary policy that is sufficiently restrictive to return inflation to 2% over time.
So the Nasdaq's just currently hovering around about 12,064, 12,070.
Most interest-sensitive sectors of the economy, particularly housing.
Did drop a little bit on this news, on him talking, and it hasn't recovered as yet.
Especially on inflation. In light of the cumulative tightening of monetary policy and the lags with which monetary policy affects economic activity and inflation, the committee decided to raise interest rates by 25 basis points today, continuing the step down from last year's rapid pace of increases.
Right, this is where we should start to get a little bit more of a reaction in the market.
Will better allow the committee to assess the economy's progress toward our goals, as we determine the extent of future increases that will be required to attain a sufficiently restrictive stance. We will continue to make our decisions meeting by meeting, taking into account the totality of incoming data and their implications for the outlook for economic activity and inflation. We have been taking forceful steps to moderate demand so that it comes into better alignment with supply. Our overarching focus is using our tools to bring inflation back down to our 2% goal and to keep longer-term inflation expectations well anchored. Reducing inflation is likely to require a period of below-trend growth and some softening of labor market conditions. Restoring price stability is essential to set the stage for achieving maximum employment and stable prices over the longer run. The historical record cautions strongly against prematurely loosening policy. We will stay the course until the job is done. To conclude, we understand that our actions affect communities, families, and businesses across the country, Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you, and I look forward to your questions.
All right, so the Nasdaq's rallying a little bit now. We're currently up at 12,125, 12,126. Trying to recover off the back of this press conference. So what he's just said basically is he's effectively saying they're not going to be, loosening their push to basically increase interest rates, but it looks like they want to try to do this in a more controlled manner. So we'll see. We'll see how it all pans out.
Your job of combating inflation harder, and could you see lifting rates higher than you otherwise would to offset the increase in, or to offset the easing of financial conditions?
So it is important that overall financial conditions continue to reflect the policy restraint that we're putting in place in order to bring inflation down to 2%. And of course, financial conditions have tightened very significantly over the past year. I would say that our focus is not on short-term moves, but on sustained changes to broader financial conditions. And it is our judgment that we're not yet at a sufficiently restrictive policy stance, which is why we say that we expect ongoing hikes will be appropriate. Of course, many things affect financial conditions, not just our policy. And we will take into account overall financial conditions along with many other factors as we set policy.
Rachel. Hi, Chair Powell. Thank you for taking our questions. Rachel Siegel from the Washington Post. Over the last quarter, we've seen a deceleration in prices, in wages, and a fall in consumer spending, all while the unemployment rate has been able to stay at a historic low. Does this at all change your view of how much the unemployment rate would need to go up, if at all, to see inflation come down to the levels you're looking for?
Should be interesting.
So I would say it is a good thing that the disinflation that we have seen so far has not come at the expense of a weaker labor market.
Yeah, we're getting a big
But
rally
I'd
now.
also say that
Big rally on the
disinflation
Nasdaq.
process that you now see underway is really at an early stage.
Nice.
What you see is really in the goods sector, you see inflation now coming down because supply chains have been fixed. Demand is shifting back to services, and shortages have been abated. So you see that in the
I'm just gonna put him down, right? So I'm just reducing the volume, right, on Powell, and I want to take you guys over to the Nasdaq, right? So, 1 second. Should have been a bit more organized. 1 second, guys. Sorry. I want to show you this rally, right? I want to explain it. I want to explain something. Right, okay. So, should be a few seconds, and you should see the chart, right? It doesn't sound like the 25. The market's currently pricing. Yeah. Well, check this out, right? So, this kind of expectation, that the market was going to be, and I know Powell's talking in the background. I'm trying to listen to both, right? So let me just turn him down just a little bit more, because I really want to talk about something. Okay, so this rally going into today, all right, has obviously been pretty good. It's pretty sustained, and this is part of the reason why I say everything's always, like, the chart tells you pretty much everything that you need to know, right? There's a lot of other things you can look at, but for me personally, I mean, the chart's everything. So today, the expectation was 25 basis points. That's what happened. And you see this drop here, right? Because people are in anticipation of, okay, what's he going to say? Are they going to continue increasing interest rates? If they do, is it going to be aggressive? Is it going to be sustained? Is it going to be 25 basis points at a time? So it's nice and, are they giving attention and care to the economy so they don't break it effectively, right? Now, one thing that people need to understand is that this rally that's happening on the Nasdaq right now is based on the expectation, right, that everything is good, right? Things are okay, things are great, things are happening the way that Powell is saying they're going to happen. They're on track to reduce inflation down to this so-called 2% that they're trying to achieve. But ultimately, whether or not that's going to be a reality is something that's very, very important for us to track as we go forward. And the only way to do that is to look at consumer spending, is to look at the way that people are being affected on a day-to-day basis, right? So you see this rally and you're like, okay, when you see a big candle like this, everything looks great, and you forget to remember that at any moment in time, if the economy runs too far ahead, they have to increase by, say, 50 basis points. They might have to do something pretty dramatic like, 75 basis points, because the more the market rallies, the more inflation becomes, or at least the more inflation goes out of control effectively. And if that starts to happen, then they have to step in and be more aggressive, in the way that they're increasing interest rates, to stop the growth and effectively affect the market in such an aggressive way, right, that you end up seeing one of these like flash crashes, for example. And this is part of the problem. This is what I'm trying to ascertain. This is what I'm trying to get people to understand, that on the surface of things, everything looks great. But for those of you that were around, during normal interest rate announcements and FOMCs and non-farms and so on, right? Didn't we used to get really aggressive responses on Bitcoin when these announcements used to come out? And yet today, and in the last 2 or 3 sort of rate announcements, we haven't really seen anything, in terms of the cryptocurrency market, because the cryptocurrency market doesn't give a shit about inflation, doesn't care about the interest rates, doesn't care about any of this stuff. The cryptocurrency market is basically waiting for regulation. It's waiting to see whether or not the big players are going to step in, and the only way that they're going to step in is if they're confident that their money is safe. Pure and simple, right? So there's a lot of things for us to track. And I apologize, obviously, that today's been a little bit sort of all over the place. It really wasn't organized at all. I just wanted to just come on and just ramble, right? But ultimately, so far, everything seems, hunky-dory, market's rallying. The expectation for me personally was, and I even said this recently, that the market was likely to rally. I even said it, in some of the discords that I'm in. And I was saying, I feel that the market could potentially rally. And I haven't said that for a very, very long time, on this rate announcement. So we're seeing that. You can kind of get the general sentiment that that was going to be the case, and obviously that's what we're seeing. Now, whether or not this is sustained, there's plenty of movement to go back up. I mean, 12,500 is a key level on the NASDAQ. So we'll see if price does get up there. But as I was saying, and I don't know if anybody remembers me talking about the S&P on the monthly chart, but I was basically saying that is a very strong month. We're likely to see continuation probably for 4,400, 4,344. I think we're good, on the S&P, which will drag the rest of the market up with it as well. So I think over the next sort of 2 months or so, we're in good shape to see, continued upside movement. Now, whether or not this is sustained, whether or not this is just like one really long ass drawn out bull trap, who knows? But we'll be able to see all of this unfolding as we go. And with all of that said, I'm going to turn Powell off because I can't stand listening to his voice. See you later. And yeah, with that said, I'm going to call it a day. And again, I apologize that it was a bit rough in terms of the live stream. I hope you guys gleaned some useful insights from it. And then going forward, obviously, at some point, when I start to sort of feel back up to it, I'm gonna get back to doing live streams a little bit more frequently, and just basically talking about everything crypto related, really. Because as much as I love trading, I also love the cryptocurrency market, and I'm heavily involved in the cryptocurrency market as well. So I want to make sure that, some of the things that we've got planned, we discuss them a little bit more to kind of really push things. So yeah. Okay, I've already read that one, yeah. All right, guys, so I'm going to leave it at that. I hope everyone has an awesome evening, and I will catch up with you guys really, really soon.